Thank you for joining us this afternoon. This afternoon session, we're going to look at the latest support offerings for UK exporters. And after this session, which will run for 45 minutes, there's two breakouts, which will look at the products in more detail. By way of background, the UK government is committed to retain the UK's position as one of the world's leading exporters. And for the financial year just closed, 2020-21, the UKEF, they provided a record 12.3 billion in finance and insurance, directly supporting 549 UK businesses, double the number from the financial year 2018-19. And they supported up to 107,000 UK jobs. However, against that, the exports are yo-yoing. At the end of 2020, UK's current account deficit widened as demand for goods imports recovered faster than the demand for exports. And today's announcement on the current account showed that the current account had narrowed, but that had narrowed just because of falling demand for imports fell more than exports. As I say, the government is committed to retaining the UK's position as one of the world's leading exporters. And the government announced in their policy paper, Build Back Better, and through the 2021 budget, that to ensure UK exporters can compete effectively, the government will be reviewing its export strategy across government by the end of 2021. We've seen the Department for International Trade set up its Export Academy, and UK Export Finance has had an increased capacity in terms of what it can lend and what it can support. Against this background and the challenges of COVID-19, UKEF and the UK's financial sector has been active in providing support and enhanced product offerings for exporters across the board, from SMEs to the BAs of this world. This session is going to look at two products that have been recently launched by UKEF with the input of UK Finance. These products are both focused on SME support. In December 2020, UKEF launched the SME-focused General Export Facility, which looks to provide exporters with working capital. And this product is no longer supported for specific export contracts. And in February 2021, UKEF launched the Standard Buyer Loan Guarantee that looks to provide streamlined support for SMEs. Before I introduce the panel, I wanted to actually just make a personal note, because there are many individuals at UKEF and the banks who provide invaluable support to exporters, particularly the SMEs. And I know that these exporters are very, very grateful for this support and the support from these individuals. And it was with great sadness to learn of Robin Ogilvy's passing this year due to COVID. Robin was a great ambassador for UKEF, and I know he will be much missed. So I just wanted to add that as a personal note, because I've worked with him for many years, and I know he was well loved throughout the exporting community. I'll now turn to the panel, and it's really is a privilege to be with the panel this afternoon. It's a pity we can't be in person, but it's great. We've got a wealth of experience, and a big thank you to Jeanette, who has stepped in at the last moment. In no particular order, got Eric Ballish, Head of Corporate Trade Sales at Bank ABC. He leads the UK and Ireland corporate team in the bank. I've worked with him for many years. Carl Williamson has joined UK Export Finance in September 2019 as head of trade finance. He's responsible for a trade of originators and underwriters in providing products and solutions to UK exporters. There's Mark Ling, head of trade and supplier finance at Santander. Mark is very active, not just in his day job, but very active on a number of initiatives looking to support UK exporters. And one thing that I quite liked in Mark's mini CV that he provided me with, he said that he's passionate about developing and supporting international business across the corporate and commercial segments. And I think that goes across the panel here. I think a lot of people working with SMEs in international trade and export finance, they really are passionate about it. Stephen Pegg at UK Finance, he's the one of the managing directors there, and his responsibilities include trade, export, and import finance. LIBOR transition, which must be occupying so much time. I just dread to think. And Jeanette Jones from DINTS, who's the head of financing solutions and partnerships. We've got a broad spread of panelists with very interesting backgrounds. If people do have questions, please raise them. Before we go into a panel discussion, it'd be very useful, Carl, if you could provide a background to those the new UKF products that we're looking to talk about this afternoon.
Yeah, no, thank you, Mark. Thank you for the introduction. Yeah, without obviously going into too much detail, because I'm sure we'll be discussing it during the panel discussion. Yeah, just to give a bit of an overview of both Jeff and the Standard Buyer Loan Guarantee, SBLG. As you rightly said, we're trying to respond to market need and demand, looking at our products to make them more flexible to help exporters. I think with Jeff, as you rightly said, it's a new scheme that we introduced at the back end of last year, very much alongside the banks and UK Finance and yourself as well, from a lawyer's point of view. As you say, it covers a broad range of facility types. It's a guarantee of up to 80% that we issue in favour of the lender. And the crucial thing is that it supports general financing needs of eligible exporters. And I think that's the key thing, is eligible exporters. As you rightly said, it's a bit of a move away from our previous schemes, and they're still in play. But our existing schemes tended to be contract specific. And Jeff is not contract specific. It's related to whether you're an eligible exporter. And what do we mean by that? And for similar other working capital schemes, we look at the exporter and see what is their export turnover over the last 3 years. If they've undertaken 20% in 1 year of export turnover, they're an eligible exporter. If they don't meet that, it's 5% in each of the last 3 years. So not a high threshold, but does show that we are trying to help exports itself. The facilities it can back can also be for domestic as well as international trade purposes. So very flexible. In terms of the SBLG, Standard Buyer Loan Guarantee, it's a very simple product. And we say that in terms of it's allowing overseas buyers to borrow in respect to purchases from UK companies. It's where the bank lends. Again, we do not do the lending. We are guaranteeing the bank who are lending to that overseas buyer. And what it's related to is that this allows the exporter to get paid under the terms of their contract. So that could be within the milestones or the shipping elements of that contract. Whatever the contractual arrangements are, they can get paid by the overseas buyer. And we are guaranteeing those repayments by the overseas customer. It's relevant for contracts of between 1 million and probably up to 30 million pounds. And it's a quick and simple process in that the bank still documents the loan and we have a separate guarantee with the bank itself. I know my colleague Stephen Head will talk more about this when we have the breakout sessions later on.
Thank you. I mean, one thing that I thought that was very interesting about the GEF is that flexibility in terms of giving exporters the ability to access general working capital, because I suppose part of the challenge for an exporter is if you've got lots of small contracts, to go through the process of getting support on a export contract by export contract basis, then it becomes really quite time consuming and cumbersome. I mean, in terms of the attraction to exporters, do you think that's the biggest pull?
Yeah, I think that flexibility and the fact that it is linked to the underlying facilities they have with the bank. So, you know, it rather than, as you say, linking to each time they have a contract, they're having to go to the bank who's coming to UK. It's very much, we put in place the one guarantee to cover the working capital facilities, the trade facilities that business has. And then we leave the relationship with the bank and the client, and that they just undertake business on a day-to-day, business as usual basis without having to come to us. So we would expect that as customers do or clients do with banks, they have an annual review. That's when we would probably review GEF as well. So yeah, much more flexibility, easier, not as bureaucratic, because it's coming to UK once a year probably. So yeah, a lot more flexible in that respect.
Yeah. And perhaps I could put a question to Mark Ling, because I know both you, Carl, and Mark were very active in the development of the product. I mean, Mark, from a banker's perspective, from your client's perspective, have you seen much interest?
So I think it's been a game changer, Mark. What we didn't mention was that the banks have worked very collaboratively with UKF probably a few years before we launched GEF in creating a new delegation scheme, under the old bond support scheme, really. But and that was helpful, but it really didn't change the dial. And we started the journey with GEF before COVID struck. We certainly had Brexit in mind. And we certainly had how we can help more SMEs to export, but we didn't have any idea about COVID coming along. So fortuitously, that particular aspect is something that, GEF can help with, because you had a lot of balance sheets that have been damaged by COVID. And so, this is one of the tools that can really give confidence to exporters that, if they can go out and win business, then they will have the financial backing behind them through using the GEF program, both through working capital and bond support, which still remains a significant requirement of the overall GEF scheme within it. But as Carl said, the flexibility is there. So we don't have to differentiate necessarily between bonds or working capital. We can do both. So the flexibility is what I think is really important. It's created efficiencies within businesses, as we've mentioned already, because before you might have to do 10 different applications in a year to support one business. Now you just have to do one. So that's creating more efficiency within the SME and certainly more efficiency within the banks and UKF. So those are all really good things. And my own business, from an origination perspective, we've probably got in our current pipeline, probably 40% of the opportunities we've got in our real tangible pipeline have got GEF as a component of it. So, as I say, a game changer in my view.
Excellent. And in terms of managing expectations, because this was in development before COVID and coincided with COVID. And I know with quite a number of the COVID products, accessing them is really very, my understanding is it's really quite streamlined. Well, it's the access to those COVID products is very easy, or relatively easy, I can say. That's
absolutely true. And we certainly had a fear within the industry, the trade finance industry, that the different COVID schemes, which Stephen can talk really eloquently about, because UK Finance was at the heart of those schemes, and there was a concern that these would substitute structured trade finance facilities and Jeff, etc. But the reality is, people recognise that Jeff is an enduring product. It was designed pre-COVID. It will be here after COVID. Its genesis was for a very different reason. So, I've seen interest, just only increase as we sort of launched really at the start of this year, and as all the different 5 initial organisations that were approved for Jeff have got to grips with the program and started completed their internal communications and educations and started getting out to the customer base. So I think it's good news all around.
I mean, perhaps that's a good way to, Stephen, in terms of, your work must have been really cut out over the past 12 months with COVID, LIBOR. I don't think what other things you've had to deal with, but in terms of managing away from these COVID policies where people have actually talked about money being effectively helicoptered in, moving into I suppose a more back to normal space in terms of where accessing finance it's not going to be this whatever phrase one uses about the money that was just pumped into the economy.
Yes, as Mark says, this was quite a timely launch, really. I think that substitution effect from the lending schemes was certainly a feature a year ago, when the height of bounce back loans funding was going into especially those kind of smaller businesses, and we saw invoice finance and other working capital facilities decline markedly, and that's not surprising in the sense that trade was badly affected and people just wanted an injection of cash. Funding is inevitably fungible, isn't it, for any small business, but the structure of finance matters. And I think one thing that we're all very keen to see is that businesses do take the right form of finance in the right mix for the right purpose, particularly in this space where there's an element of service, there are benefits of control and of risk, which can ensure that both the finance provider and service provider and the business are better supported through the right form of finance. So we've seen the benefits of this scheme really in being able to fit in really with what as Carl was saying, balance sheets which are slightly out of shape at the moment. It is more flexible. It can provide certainty to a business. Having had that facility, that for your next transactions you can kind of bid with confidence, and it's just more accessible as well because of the economies of scale you get in terms of efficiency. Lower level transactions can be incorporated within this. So, what we've seen so far clearly is, a focus on the significant large providers, and I'm particularly grateful for Mark in chairing our new International Trade Committee at UK Finance. We've had a long-standing one that's been focused at the larger corporates, more of the export loan market with UK Export Finance, and I think we'll see more and more providers across the market wanting to get involved with this.
I think UK Finance, along with UK Export Finance, has been really quite progressive in terms of looking to develop these products and to focus much more on the international trade, both from large corporates and small corporates.
Well, it's interesting that it probably is the driver of growth and recovery. However, challenging that is in terms of the trading requirements that many businesses are facing. We've seen parts of the world economy that have opened up much faster, really, than we have done in the UK and Europe. So growth is going to come, I think, from, as the Trade Barometer was showing, from the US and indeed Asia and Africa, which have been relatively small up to now. So that's important that we're able to kind of support that a new wave of business who are having to again restructure things. We've seen lots of changes in supply chains, so that in itself will create different relationships, new requirements, unfamiliarity, which probably requires a little bit more in terms of support, documentation and control. So, we're kind of very much focused on making that happen. I think the other lesson of this COVID period has been, we've worked very closely with government and agencies such as British Business Bank and UKEF, and we can see the complementarity of what is required. There are big changes facing us all. LIBOR transition is obviously one of them. The other thing I'm responsible for is sustainability across the board, and movement to net zero, understanding your supply chains, all going to be critically important for a building back better agenda.
Yeah, well, I think sustainability is really very interesting. But actually, before I move to Eric, one thing just to pick up on that reference to the trade barometer, and a question for Mark. It's a publication that comes from Santander. I was very interested to see when I was looking at the trade barometer. So when it looks at the operational challenges for international businesses, at the top at 44% is bureaucracy, and at the bottom at 8% is access to finance. So I was wondering, Mark, if you could comment on that.
Yeah, look, we've been running the barometer now for about 4 years. It's a sample of about 1,000 companies, very focused on SMEs and mid-market companies, but with a few larger corporates in. So it's very much at the heartland of the agenda, I think, for the UK and post Brexit. But it's been really clear that access to finance has not been the biggest issue, and as I've said to you in the past, it's not that it's unimportant, it's just not the biggest issue. And the biggest issue is for SMEs in particular, finding trusted connections, overcoming bureaucracy, access to new markets, helping with supply chain logistics. These are the big things on SMEs' minds, and these are the things that the whole ecosystem that's focused towards trade is really now starting to gather pace, I think, to try and address and support. And there's been a lot of discussion already on this conference about digitalization, that and standardization of these are all really important things. But as we said already, Jeff has created efficiencies both for SMEs, but for UKF and for the bank. So that's to be welcomed in helping overcome some of the bureaucracy. But it's if you like, one small step for mankind, Mark, right? It's not only one small step.
Thank you. Eric, if I could turn to you. So Bank ABC focus very much on the growth in emerging markets in North Africa, and I know your background has been mining, oil and gas. Stephen touched on his responsibilities for sustainability. I was wondering how you see these new products, both from, I suppose, for you, those growth in emerging markets in North Africa are key. But also you've got that sustainability background. It'd be interesting to hear your take on these products.
Yeah, they're two very interesting points, and obviously quite closely aligned, given that many of the emerging markets are, of course, hydrocarbon driven to a large extent. The sustainability agenda within UKF is right up there with the proverbial oxygen, as we've seen from the Prime Minister, and we've got COP26 happening here in Glasgow, where I am at the moment, in November. So it is very, very much uppermost in folks' minds. And I think when looking at the various transactions that come across our desk, and just as a general observation, the ESG dimension is very much to the fore. So we are acutely aware of that, and when we engage with customers, with clients, that is one of the first questions we have with them is, what is it you're producing, where's it going, and being very clear that there is a very keen focus from government on the ESG dimension. They've got sustainable development goals mentioned within the application forms, and within customers, there's always the CSR requirement. So those three-letter acronyms tend to run along together quite closely. But I don't, it's one of those things we try not to get super absorbed by it, but we just have to be very conscious that these items are extremely important and will not get any less important. And of course, as Mark talked about, digitization being a feature of the conference thus far, then of course the Green Agenda too has featured large. So turning more now to the products, if you like, and the markets we serve. So one of the good things about the products that we are looking at. So there's a SBLG, of course, and it has a sister product, which is in bills and notes variety, which we are very familiar with. Both run alongside, and because there is the government guarantee, it does enable banks like ours to be, let's say, country agnostic to a large extent. So whilst we have a focus on Middle East and North Africa in our day-to-day business, and that's probably for which we are best known, we are able to take a wider view of these opportunities on the basis that the government is taking the country-related risk, which is a key point. I think in looking at the SBLG and really, I think, advising customers to consider, who is your financing partner, particularly in the SBLG. If they have a presence footprint or availability in market, they will be a good choice, because the structure is slightly different, that you have to go to the local market. And it's interesting that we were hearing from UKEF the other day that there are a number of foreign bank participants now engaging more in the SBLG, which is clearly very encouraging and gives customers a sort of wider choice of partner. So let's say it's not just our interests are not simply served by emerging markets, but can be covered elsewhere, as can other banks.
Yeah. And actually, on the CSR and ESG, I mean, certainly one of the things that I've been working with BEXA, the British Exporters Association, on is trying to make sure that companies are export ready when it comes to business integrity. There are issues around modern slavery, bribery and corruption. I mean, I suppose one question I've got is, are UKEF's requirements around business integrity any more onerous than bank requirements? Because I mean, it strikes me that those requirements that you have from UK Export Finance around business integrity, I mean, they're things that companies should be doing already, and it's probably what the banks require.
Yeah, I don't think they particularly have a higher hurdle in many respects. They are very acutely aware on the ESG factor, as I've mentioned. The other two factors, I think, as you quite rightly suggest, Mark, are just key hallmarks of what we would expect from an integrity perspective from clients, and that we would do in our sort of normal diligence when looking to cooperate with either existing or new clients. And to some extent, the goalposts are changing. Of course they are, but that's just what happens in a rapidly developing society, and businesses just have to be aware of that. But I don't think UKEF's standards, so to speak, are dramatically different from ours in those regards. Yeah. The ESG, I think, is something that needs to be considered quite closely, though.
Yeah, I'll just add in, Mark. I think absolutely, and what Eric says is absolutely right. I mean, we uphold the highest standards. You would expect so from a government department, but very much working alongside our banking partners, to develop particularly the areas around climate change, ENS, anything around that area. And as I say, it's very much, we look at the integrity of the client. We do our own level of due diligence. But I would say probably very much in line with how the banks undertake their due diligence.
Thanks, Carl. Jeanette, it's great that you could join us today. From an exporter's perspective, I know Dint is very active across the growth and emerging markets, and you're responsible for their financing solutions and partnerships. How do you see these latest offerings from an exporter's perspective?
Thank you, Mark. I think this is very welcome to the exporter market. We know there's huge trade gaps, deficits that need to be filled, and Dint's being a UK SME exporter, along with many others, definitely welcome this change. We have experience with UKF. There's long-standing relationships through Dint with Geoffrey de Mowbray, who's the Brexit chairman, and working with UKF for many years, with myself as an ex-banker coming into working with Dint. And you look across the landscape to looking across funders to support SMEs. How do you do that? How do you work that through? There are multiple challenges that SMEs actually come across. With UKEF, we've been recently working on a couple of deals, which we're about to close one, in fact, with Santander, which is in Peru with their export team. And, working through that under the UKF Supply Credit Finance Facility, which is contract-based. So coming back to what Carl said earlier today around the fact that the GEF facility isn't contract-based, I think that's very welcome. It sounds like there's a lot more flexibility now coming through UKEF. We already witnessed that within working with UKF on these couple of contracts that we're working on at the moment, to the extent that when you're trying to align all the stakeholders, obviously the customers, the banks, the UKEF, our own business, lawyers, engagements for contracts, etc. Sometimes that's quite challenging because everybody has a different timeline. And I think coming to the point of ESG as well with UKF, there's now a new process for ESG, which tends to be at the moment, and maybe things are going to change, is tax on to the end of the approval process, which again is very new, which we all have to try and ensure that we're covering all the questions for that. So I think that if it's now much more flexible through the GEF product, which we are very keen to look at, and also the SBLG as well for customers and ourselves, I think that will make a marked change and a pivotal change for exporters in the UK to have a support which is actually a little bit more streamlined and maybe not so heavy on the bureaucracy like in terms of the trade barometer. But I also think that, just to make a point there in terms of the financing side of that, I do think that actually it can be very difficult to get that alignment with funders. It's still not so easy. Sometimes there's a lot of mismatch in payment terms, which creates bottlenecks within the financing side of that, which does present challenges. So I see it as very positive from UKF, and we have to say a big thank you to Steve Head and his team currently working with us on these facilities, because they have given us flexibility that we needed to ensure that we could get this transaction over the line and others to come. So a big thank you for that.
Thank you. And then so in terms of going forward, particularly the GEF, that from an exporter's perspective, the attraction there is that it doesn't have to be contract by contract specific.
Yes, I think that'll be again very welcomed to the extent that they can look at the whole business, and hopefully that from that as well we can expand from that, making it more efficient, and again maybe some of the processes are a little bit more streamlined, which means we can move a little faster. We sometimes, as we all know, we can get caught between when something needs to be delivered versus when approvals are put in place. So actually, where there's less paperwork, And actually, when we try and move to digital as well, hopefully with UKF in terms of lining with digital, that's also going to be helpful to the extent that, again, things will be a little bit leaner. A lot of waste in terms of, paper hopefully can be removed, and some of the processes can be a little faster, which is addressing some of the bureaucracy issues that everybody is faced with.
Thank you. And a question that's just come in, which is a question I think probably for Carl. In terms of direct lending, I mean, UKF, that gives, I think, UKF and UK exporters a competitive edge. Is it? I mean, if you are an SME, is that something that an SME can access?
Not really. Being brutally honest, direct lending is more in our buy credit, longer term funding products. SMEs for Jeff and the other products that we've talked about, they are guarantee schemes where we are guaranteeing the banks, so that we don't direct lend. We still expect that relationship to be between the funder and their client, and we will guarantee the facilities that the funder provides.
Thank you. And Stephen, a question for you. I'm not sure whether you'll be able to answer it or not, but because I mean it's a fast-moving situation. But one of the questions came up about concessional finance, and I don't know whether UK finance is involved at all, because I mean there's been the relaxation of state aid rules. I know you sit on the European Banking Federation.
Yeah.
And there's been all. I mean, you had the Department for International Development move to the Foreign Office.
Yeah. So just on state aid rules, the previous guarantee schemes were written under the temporary framework, which was agreed in Europe, which was more flexible than the rules had previously permitted, including the guarantee of export facilities with a degree of kind of concessionary terms within them. Clearly here, that included for bounce back loans and CBILS, coronavirus business interruption loan, the first year's interest and fees being paid for the customer by the government. Those rates having reflected, the benefit of the guarantee. With the new scheme, recovery loan scheme, that's within Great Britain, mainland Great Britain, written under the projected terms of the new UK scheme, as we're no longer subject entirely to the European one. But businesses with a connection to Northern Ireland, you probably won't be surprised to hear, are still caught by the temporary framework, which is why RLS only runs to the end of the year. We'll get confirmation of the new GB state aid rules, which are a little bit more flexible than the European ones, has to be said, in the autumn. So this is a kind of effectively a trial period and a bit of consultation being finalised around that. The future of European state aid rules yet to be seen. But one thing I would say is that in the end, with interest rates being as low as they are, it's probably more important that people have the right form of finance rather than just opting in to save and shave the odd percentage off their total costs. And that's where I think we'd all want to be, to manage the facilities and support customers to mitigate their own risks and to make themselves able to access the most competitive terms. There are a wide range of competitive offers out there now, and I think we're going to see this more greater use of collaborative kind of forms of finance, for the medium and longer term. But credit assessment's going to be required, and I think you asked earlier on, Mark, as to how you compete against kind of no interest, no security, no credit assessment. pretty hard at that kind of bottom end. That's no longer available. That was a temporary kind of setup. And I think it's in businesses' interest actually to get back to a bit of planning and forecasting. Inevitably, there are going to be questions, but those questions and the work that's done in order to fill in the gaps enables the finance providers to provide better tailored support, will enable the business better able to manage their risk going forward, especially during a period of continued change. But we have some expectations to manage around that, because quite clearly the crack cocaine of the completely open-ended scheme is not one that is easy to kind of adjust from. But nevertheless, I think it's encouraging that we're beginning to see that pipeline build now, and the kind of engagement, especially involving professionals and intermediaries who have a really important role to play, I think, in advising clients to take advantage of the right products for the right purpose.
Thank you. Eric, look, in terms of looking at those growth and emerging markets, do you see a need there for concession? So we've developed these products, but in terms of bringing in concessionality for borrowers that may actually be a sovereign or in a country where there's a debt service suspension initiative, do you see a need there in terms of what we need to develop next?
Well, I think it's a really interesting point, and I think in the overall sphere in which we're talking at the moment of the crack cocaine sort of description, I think it's fair to say that we'd certainly recognise, and I think as an industry we'd recognise that our exporters are going to need the likes of ECA financing and supported lending of one kind or another, regardless of how one describes that. That is going to be a feature for many years to come. And the likes of the SBLG, I think, will be an essential tool in the armoury for the SME and for larger corporates as well, to ensure that they can effectively operate in these countries and be supported. In fairness to UKEF, they have come a long way in the last number of years in providing these types of more flexible products and more focused products. The support that UKEF offers relative to some of the other ECAs is actually extremely generous, and I think sometimes our exporters aren't necessarily aware of just how keenly competitive UKEF is, and maybe to some extent we need to evangelise on that a bit more, because these products are definitely going to be needed for these markets for the foreseeable future.
Thank you. So a question for Carl. If you're an SME and you've been listening to this panel and you think, well, those are interesting products, they could help me, how does one go about it? Does one get in contact with UKEF, or does one get in contact with your bank?
I would say in the first instance, it should be through their bank. As Mark says, a lot of the bank's relationship managers, trade directors, they've across all the 5 main UK banks certainly had training and a knowledge of Jeff. But the first place they should go is to the bank, because they should be talking about their financing needs with them first, and then whether UKEF support is then needed on top. So hopefully the bank can do it without our support. But yes, they can also, if they go onto our website, they can see how to get in contact with local export finance managers, people around the country who are close to their businesses, who can tell them a bit more about our product range and how we can support, but very much bank first.
Thank you.
Maybe if I make a comment there, Mark?
Yes, please do.
With regards to obviously working with banks and UKEF, we currently have used the supply credit finance facility, and I think that the sense that we got, and maybe with other exporters, is that it would be great if UKEF opened that up to more institutions, I think more institutions would be able to benefit from that, which means that obviously SMEs benefit in terms of being able to export more. We find that that could be quite restrictive depending on which country you need to be working in, and which banks that you can actually choose to work with under that particular product. We haven't used Jeff yet. We're hoping to do that, and maybe that may work slightly differently, and there are many more banks that are involved with Jeff and the new product. But it would be great to see more banks that can actually take more diversity of risk, as DINS being a global business that is exporting to the emerging markets across Africa, Latin America, Asia, and more recently now the former US and Central Asia. It's quite a vast range of risk, and sometimes that's quite difficult to see some of the institutions trying to work with that. With the UKF support, clearly that changes dramatically with regards to the guarantee, but it would be great to see a little more of that from some of the banks.
Great, thank you. Well, on that note, I'm afraid we've run out of time, but I'd very much like to thank the panelists for joining us this afternoon. And we're now going to split up into two groups.